Hey tribe, welcome back to my channel. Kinna Mapalomaku. Thank you so much for watching the two previous videos in the new year. I've been getting a lot of comments and a lot of engagement from that, so thank you so much. And I have a lot of new tribe members, so you are very welcome here. So today I want to talk about property, about buying a house, and one thing that we hardly ever talk about, amortization. Okay, so exactly how much of what it is that you're paying, your monthly debit order, is actually going towards paying the value of the property versus what you give to the bank. Okay, so first things first, I am not talking about whether you should buy property as an investment or whether investing in the stock market is better. That's not that video today. Okay, today we are effectively saying if you know that you want to be a homeowner or you are already a homeowner, how should you be looking at your bond? All right. So it is an emotional decision, man. You know, buying property, having a home, it is an emotional decision, and I absolutely get it. You know, when we stayed in Joburg, we stayed in Joburg for many, many years, but we had owned our house we had lived in our house for 6-7 years, somewhere there about, I can't remember. And it feels good, man. You know, being able to paint, being able to think about, okay, what do I want to do to this place? So definitely a very emotional decision. And I know there's two schools of thought where, you know, people say property is not an investment, but you need somewhere to stay. Renting is better and vice versa. But again, today is not that video. Today, I'm going to show you exactly what it costs you to own a home, okay? So normally when you get a bond, when you go to the bank and you say you apply for a bond and you say, I want to buy this house, they either do a 20-year bond or a 30-year bond. And I know a lot of the times people say, but I want to pay off my home much quicker, or that is too long. The bond period is too long. Guys, just because the bank said you can pay off your bond in 20 years or 30 years does not mean that you have to stick to the 20-year or 30-year mark. You can pay it off quicker, and I'm going to show you how. Today, I'm going to show you the hack on how to pay it off quicker, but also to show you if you are just sticking to the monthly repayments that the bank has given you, just how much you're actually giving to the bank. Okay, so that's number one. Then the second thing I want you to know this about banks is that they play with two things and two things only when it comes to a bond. Number one, they play with time. So we've spoken a little bit about it in terms of it's either a 20-year bond or a 30-year bond, all right? Then another thing they play with is interest rate, okay? And the interest rate right now, the prime is sitting at 10.25. But remember, the interest rate that you get is not based off of just, okay, the prime is 10.25, that's what you're going to get. It's based on your individual profile. So if you have been good with paying your debts and liabilities and expenses on time, in time, every single month, it means that your credit score will be better, and they look at that. They will say, all right, you have been prudent with your payments. You haven't had any missed payments, you know, for the past couple of years, and we'll either give you prime minus or prime plus. So prime minus means 10.25, sometimes can be -1, minus, I don't know, 0.5, or whatever the case is, and it all depends on you as an individual, all right? So that's what it means when you sometimes hear people say, oh, I got prime minus. Very, very lucky people. If on the other hand, you hear other people say, I got prime plus, prime +1, prime +2, or it could be prime plus. And sometimes that means perhaps you do not have a long credit history, or you're just starting out, you know, in your career, or perhaps your credit score is not great. So I think one tip I would say, if you are in the market to buy a property, try to fix your credit score as much as possible so that, you know, you can get a favorable interest rate. So yes, they play with time, either 20 years or 30 years, and they also play with interest rates, because if For example, I'll give you an example. A couple of years ago, we wanted to buy my dad, my siblings and I, my sisters and I wanted to buy our dad a car. And we had quite a large deposit. So we went and said, okay, give us two codes. One, and I'm going to give an example. Let's say the car was 100,000 rand, okay? And we went and said, give us two codes. We have a deposit of 80,000. This is just an example of 80,000 rand. And we want to finance 20,000 rand only. Or give us a code where we finance the entire thing. And lo and behold, the one where we are financing only 20,000 rand, the interest rate was higher. But if we're financing the entire thing, the interest rate was lower, right? Because obviously, if they know that you're going to pay this thing off quicker, it means that they're not going to make as much money out of you as possible. But if you finance the whole thing over, let's say, 5 years, 72 months, for example, then they know that they will recoup their interest as much as possible. Okay, so always, and this applies with houses as well, and I'm going to show you how, that get different codes and also get different codes from different banks. The bank, I love most banks, they do a good job, but you are not married to them. This is not a marriage. Always go and see what other favorable interest rate you can get. All right. So going back to them playing with time and interest rate. So sometimes, given the example that I've just given you with the car, sometimes take a look and say, okay, can I get a code to say, if I were to pay my bond in 20 years, what would it look like? If I were to pay my bond off in 30 years, what would that look like? I can almost guarantee you that the one for 20 years, the interest rate maybe will be slightly higher, but I mean, even just 0.5% is still it will make a big difference in your finances. If you go for the 30-year bond, and I know a lot of people have this thought and feeling, it's too long, I don't want to pay off a bond in that time. No, I'm not saying that you should stick to 30 years. Get the 30-year one if the interest rate is lower on the quote. So you will see, they will say, okay, 30 years, the interest rate will be slightly lower because obviously it's for a longer period of time, but you know that you are doing that because you're going to be paying extra towards your bond. Okay, so effectively beating the system, if you want to call it that, all right? So always remember, they play with time and interest rate. The longer the time, the more they're going to get, and the higher the interest rate, the more they're going to get. So you always want to make sure that those two things, you're playing with them as well, okay? Then I just want to show you, if you took out a bond for 20 years, and let's say 2 million, and I'm going to show you now with this calculation, the amortization calculator. So let's say the loan amount is 2 million rand, okay, and you're going to pay it off over 240 months, which is 20 years, and let's just say they give you exactly prime 10.25, okay, meaning that every single month your payment, what the debit order will be, is around 19,630. Let's round it off, okay, as you can see on the screen. So of that 19,600 bucks, the amount, the first time that bond goes off, the first time you are saying my bond is going off, that first payment, 19,633, 17,000 goes towards the interest. Only 2,550 goes towards the value of the property, the capital amount. So it is reducing it at such a low rate, right? And you see, of course, that's the first payment. You're left with 1.997450. And as you can see, as you go down the amortization calculator here, you will see that literally the first year, at the 12-month mark here, you are barely scratching at the capital amount. a big chunk of it is still going towards the interest. So the bank eats first, okay? Your capital amount, you are effectively paying only 2,800 bucks at the end of 12 months. That is insane, okay? And you will see it remains the same. I want us to get to 120 because that would be half mark in terms of the bond. So at 120 months, so in 10 years, after 10 years, now you see you're paying 12,000 rand. So remember, let's say, and I mean, in this example, we are effectively saying that the prime remains the same. You know, they don't reduce it. The South African Reserve Bank doesn't slash it or doesn't go higher. This is just an example to say, okay, what would that look like? But remember, these things do change within that period. So let's say it hasn't changed. It's still 10.25. And you're paying 19,000 rand every single month, you are paying still 12,000. So a massive chunk, more than 50% is still going towards the interest payment. Whereas now you see, okay, from paying only 2,000, now you're starting to pay 7,000 rand. Okay, so this is insane. I think when you see the numbers, of just how much is actually going towards this property, the capital value, the value of the property, you will see it's not a lot, especially in those first 10 years. And you will see then, let's say when we get to the 230th payment, you see now what you're paying every single month versus now how much is going towards the capital amount, towards the actual value of the property. And now the bank is getting less and less because you've paid them first. The bank eats first, okay? I think that's the what I want you to be aware of. And you will see right there at the end of the 240 months mark, a large chunk now is going towards paying the capital amount and now just a little bit towards the interest rate, towards the interest amount. In effect, for a 2 million rand house, because of interest that you're paying towards the bank, you are paying 2.7 million rand just towards the interest. So effectively, 2.7 plus 2 million. For a 2 million rand house, you are paying 4.7 million. Okay, and that is why I always stress and I implore you, even if it's a little bit of money, even if it's 500 bucks, even if it's 1,000 rand, even whatever extra amount that you do have, try to put a bit into your bond, towards your bond, so that you reduce this interest amount. And I'm going to show you here. So I'm going to go to another calculator over here. And so I've put in that amount, 2 million, and yes, you're paying 19,600 without any additional payment. So you can see it will take you 20 years to pay this thing, right? And the interest, again, 2.7 million. Total payment, 4.7 million rand. Now, let's say you were to do an additional monthly payment of 1,000 bucks, okay? It can be any amount for you. Just by putting an extra 1,000 rand, you will pay off your bond quicker by 2 years, 9 months, almost 3 years in advance. And you would have saved yourself 442,000 rand in terms of interest. That is mind-blowing. That is absolutely amazing. And if you were to just increase it and say, you know what, I'm going to make a couple of sacrifices and I'm going to put 2,000 rand every single month, oh my word, that is insane. That is bloody insane. So when you are planning your finances, think of, the time thing, think of the interest, think of, okay, should I go for 20 years or 30 years? And look at the difference in terms of the interest, because the higher the interest, that is actually what that costs, that is the actual cost of that bond. And say, can I, and I think it starts with, all right, I'm not going to buy at my highest. of affordability. I'm going to go for something a little bit less so that I can pay it off a bit quicker. And this is not to say don't have other investments going. This is not the conversation today, okay? This is purely looking at, yes, you do have a bond or you know you want to buy a property. What are the numbers you should be looking at and how do you make sure you pay off your bond quicker? But specifically, save on the ridiculous amount of interest that the bank actually takes. So you see, now you are, if you're paying an extra 2,000 rand towards that bond, now you are saving yourself 746,000 rand. That is a lot of money. All right, that is a lot of money. So I know sometimes you can say, perhaps I don't have 2,000 rand every single month, but when you get your bonus, right? I know people who get really, really amazing bonuses. Let's say you just say, I'm going to put a once-off 50,000 rand. Boom, bam. You are saving yourself 357,000 rand and you're paying off your bond quicker by 1 year, 6 months. So even if it's, okay, you know what? I have a side hustle that has given me, I don't know, 100,000 once off. And you do that from time to time. That is powerful. Okay, that is incredibly powerful. So these are some of the things that I want you to think about as a homeowner. Even if, I was actually talking to a friend of mine, someone I hadn't spoken to in a long time. And she was saying she's finally waking up to, this small, intricate things around personal finance and how they can have such a massive impact on one's finances. She said that she's been a homeowner for the past 8 years. And in that time, she didn't realize that, a simple thing as paying, even if it's $500, even if it's $500 every single month, it makes a big difference. Let's take a look at it. $500. You're saving yourself 200, almost $250,000. So yes, you might be well within your property ownership journey and you're seeing this. This still is for you. If you are going into home ownership, take a look at this and run your numbers, okay? And I mean, these calculators are completely free. This one is on Uber Home Loans and this one is on Property 24. But even on Uber Homes, you can do all of these calculations. And that is it. That is my story for today. That, there are so many intricate and small details that make a big impact. And this is definitely one of them. Thank you so much for watching, Tribe. I hope to see you in the next one. Remember to like, comment, share, and yes, keep on recommending some of the topics you want me to talk about. Cheers for now.